Welcome to our new tutorial series, Sum of the Parts, Building a DCF Model of Tesla. The tutorial will focus on a comprehensive financial model of Tesla with the objective to value Tesla based on its different areas of business. The tutorial consists of 6 parts, covering the preparation of the data, definition of forecasts, building of an integrated and dynamic three-statement model, sum of the parts segregation, DCF valuation including sensitivities, and finally, a Monte Carlo simulation based on different cases. By utilizing just publicly available information like 10Ks and investor presentations, we will start from scratch and gradually build and explain a fully fledged financial model for Tesla based on its 3 areas of business: vehicles, energy, and services, with the latter one also split into infrastructure-related topics like supercharging and, of course, used vehicle sales. The bottom line of the video is the question if there are any insights in valuing the areas separately in comparison to a consolidated valuation. By that, the tutorial is focused on the how to perform a valuation and is by no means an investment advice. So as a disclaimer, you should judge by yourself on any investment and not rely on the content of this educational tutorial series. As always, question anything and maximize your knowledge through different sources to get a better understanding. This tutorial is just one way to approach valuation or modeling. With that, let's have a first look on what we prepared. As I said, we started with a blank Excel sheet and simply collected all relevant data from the published 10Ks and investor presentations of Tesla back from 2011. The reason for this rather long time horizon is based on the rather short history of Tesla, giving potential insights in the dynamics of the business of Tesla, as we will hopefully see in the coming videos when defining assumptions and parameters for the forecasts. You could of course only rely on the recent years to project the future development. However, we try to dig a little bit deeper to see any patterns in the going concern of Tesla. Based on that, we simply copied the P&L and the balance sheet of Tesla. Regarding the coloring, we stick to our formatting also utilized in our LBO and CCA video. Input fields are highlighted in orange with a blue font. Next, we calculated the year-on-year change of the balance sheet items. The change is calculated differently for assets and liabilities, as we already think in terms of cash utilized and cash spent. What does that mean? For example, if we look into inventory, we see that these are increasing over time, which means that we utilize cash to build up inventory. Hence, we deduct the current year from the previous year to illustrate by this negative sign that cash is spent. The same is true for all other assets on the asset side of the balance sheet to directly see how cash is utilized. You will see in a minute why this matters. In contrast, we calculate the year-on-year change of liabilities, conversely looking at accounts payable, which are also rising over the years. We use a different format in that we deduct the previous year from the current year to illustrate that the rising accounts payable are in some way a source of financing, generating cash, because based on the terms of payment, the payment of any services or materials are postponed and represent a future obligation. Based on this year-on-year change calculation, we now simply build our own cash flow statement, which is indirectly derived from the P&L and balance sheet. You're absolutely right raising the question why we do not use the cash flow statement printed in the 10Ks. However, as the 10K version is directly derived from Tesla's accounting procedures, we do not have enough information to get any lead from the P&L and balance sheet to the cash flow statement. Therefore, we simply build our own cash flow statement. As we already prepared the year-on-year change based on the respective cash impact, we simply have to sort the single changes of the assets and liabilities to the right section of the cash flow statement, meaning operating, investing, and financing cash flow. The objective is to calculate the change in cash and cash equivalents, as cash is the so-called plug of our model, which integrates the P&L, balance sheet, and cash flow statement. So now the question is how the P&L is properly represented in the cash flow statement apart from net income. Therefore, we have to build respective schedules to break down the respective balance sheet changes in assets and liabilities to work out any P&L related factors. In our case, this is primarily depreciation, amortization, and impairments. So looking, for example, into the respective schedules, and here in operating lease vehicles, you can see that we split up or broke down the change of the beginning balance and the ending balance into related information, which we're able to identify in the 10Ks, meaning investments and depreciation. Investments, as a quick note, is net of any sales of respective lease vehicles. This is something you could also break down if you have additional information. So the key task here and for all the other assets is to identify any line items which could give you more insights on the changes of the respective assets or even liabilities, and to find a way to find the precise numbers. For example, here we looked at the accumulated depreciation and calculated the change of this respective accumulated depreciation to get some direct link into the change. In that way, we proceed with all the other assets and break down each line items to have, in the end, total D&A for our cash flow statement. In addition, and as you can see here, we proceed with all the other assets, breaking down any information we find in the 10K, because the more detail you have, the more precise your forecast can be structured, as we will see in the following videos. In addition, we also add any supplementary information, like for example headcount, with any breakdown available to see how workforce developed. This could also be used to build a specific forecast for wages and social security payments. Furthermore, we also add information on production and delivery volumes of the respective areas of business of Tesla, meaning automotive and of course energy generation and storage. As this information is quarterly provided, we have to sum it up and see how the yearly development is. This will be one key input for our sales forecast, meaning our definition of a price quantity matrix, which we will show you in the coming video. With that, we finalize today's video. I hope you enjoyed this brief introduction and preparation of the data. I would highly appreciate if you join us in the coming videos and subscribe to our channel to not miss any new upload. As always, please feel free to drop a mail if you're interested in the model or have specific questions on this topic or related topics. If you're interested in a step-by-step documentation on how to build a financial model, I would suggest to have a look at our LBO tutorial. We are always happy to support and get feedback from you. Thank you very much, and bye-bye.